What's up, everybody? I'm trying to get this chat up. I'll give you some time to enter, but on today's video, we are going to go over many topics. Today was a great day in the stock market. So much stuff happened that we're going to dive into because right now is a make it or break it kind of moment in the stock market. Do you have the guts to stick through this volatility, to see the light at the end of the tunnel? Are you an investor, or are you just going to flee? Because there's a lot of stuff we're going to talk about, but at the end of the day, you know that I am still bullish on the stock market. I'm still investing. I'm buying the dips. I'm looking at this long term, and I do see a lot of potential buys out there. There are deals. You just have to search for them. But there are also areas where you need to watch out. So if you guys can hear me, let me know in the comments down below so we can see, or in the chats, so that I can know that audio is working well. Also, if you're new to this channel, my name is Sean. This is We Are Investing. This is a channel that's dedicated in investing and personal finance. We talk about the stock market almost every single day. I upload quite frequently. I have a ton of videos out there. We also talk about cryptocurrencies every now and then. There are a few cryptocurrencies that I personally am invested in. If you're new to this channel, hit that subscribe button, ring that bell, and smash that like button. Let's get a lot of likes to help with the YouTube algorithm. Sweet, sweet. We got confirmation that you guys can hear me. So I'm not going to waste any more time. We're just going to dive into today's video. So the main thing that we need to talk about is the Federal Reserve. Jerome Powell, chair of the Fed, and the FOMC had their meetings over the last 2 days. Today at 2 o'clock, they released their statements. Nothing of surprise. They are going to continue to taper, meaning they are going to reduce the amount of bonds that they buy and mortgage-backed securities. This we knew. That's going to end come March. After that, we could see a rate hike. Now, if you've been looking at the stock market over the last couple of days, you have seen a lot of red. And this is because, in my personal opinion, the stock market is pricing in some of these rate hikes. They're pricing in at least 4 right now. And maybe we get a surprise and they only rate hike 3 times and we actually see some bullish movement in the stock market. But if you're buying right now, in my personal opinion, and from other people that I listen to, we're pricing in around 4 to 5 rate hikes right now, which is that's on the higher end. So if things do not work out that way, we could see a surprise to the upside with stocks. Where's the beer? You know I got the beer. It's right here. Modelo time, baby. I also got that water. It's been a long day. Stay hydrated, my friends. And the Fed is crazy. You know that's true. So I want to reduce my face here, and I actually want to show you a couple charts. So the biggest index that's been selling off is the Nasdaq. The Nasdaq 100. This is tech-heavy stocks. These are stocks like Microsoft, Apple, Google, Netflix, Amazon, Facebook. Those kinds of stocks, they're in the Nasdaq. And then you also have other tech stocks as well. If we take a look at the Nasdaq, and if you're on Thinkorswim or WEBULL, you can type in NDX. I think you can type in NDX on WEBULL. It might be a different ticker. This is the index, the 100, Nasdaq 100. And as you can see, we had a drawdown of more than 10% from peak to trough. But if you take a look at other stocks in the sector, in the Nasdaq 100, the average drawdown for all of the stocks is over 25%. So the majority of stocks in the Nasdaq are actually in bear market territory. The Nasdaq index itself isn't technically bear market because we haven't dropped 20% peak to trough, but we are in a correction. What else you can take a look at, if we zoom in a little bit, let's take a look at the 20-day 1 hour. You can see we've been selling off day after day after day. This day right here, which was on Monday, we had news of Ukraine and Russia. Tensions were rising and we could see a potential war. I'm not going to speak on whether or not we're going to see a war or not because I know nothing about it. But the stock market reacted and we sold off. In that day alone, we dropped 4.5% for the Nasdaq. This is a major index dropping 4.5% in one single day. We didn't see sell-offs like that. The last time you see a sell-off like that was back when the pandemic started, and then back in 2008. It's massive volatility, and you can take a look at the volatility by taking a look at the VIX, the fear index, and that was skyrocketing. If you take a look at this index, you could see that on that day, we hit a bottom. Now, this bottom is extremely important to hold. If we do not hold this bottom, we could see some more red. So me personally, given the fact that we dropped 4.5% on the day in the Nasdaq off of that news and nothing else, I was a buyer. I went in heavy on Monday, but I'm not really buying much more until we see those prices again, or actually until we see prices below that. There are some stocks where I haven't built up a position and I will nibble here and there like Disney, but I'm really waiting to see lower lows or after earnings to start loading up in some of those stocks. Now, today was very interesting. If you take a look at what happened today, and I'll just zoom in and I'll go to the 5-day, 5-minute. If you take a look at what happened today, things were green leading up to that Federal Reserve meeting, which was actually quite surprising. I thought we would see some red because the tone right now in the overall market is quite bearish. So I thought we would see a sell-off leading to the event and then a rally afterwards. We saw the opposite of that. We saw green leading up to the event. When the statement was released at 2 p.m., we saw green. That's that little bump right here. We saw green at 2 p.m. And then after Jerome Powell started his press conference with the FOMC meeting, or the conclusion of the meeting, that was fine. It was when he got into questions and people were talking about the balance sheet, the balance sheet, the balance sheet. That's probably the most important thing right now. That's what everyone has their eye on, and we'll discuss why that's so important. We started to see the market sell off, and that's exactly what happened. Now, after close, I don't know what's happening because I haven't looked at it, but if you are on Thinkorswim, you can type in /MNQ. These are the futures for the Nasdaq 100. And we can take a look at the 1 day, 1 minute to see what's happening after hours. So right here, this is 6 p.m. So we sold off. This is that sell-off that we were talking about, 3 p.m. Then here's close, 4 p.m. We rallied a little bit, but right now they are selling off, and there's actually quite a high volume in the Nasdaq. So if this sell-off continues, we could see more red tomorrow, and maybe we get to a point where we test those prior lows, which is going to be extremely important. And that's basically why I'm not jumping out of the gun right now to buy more stocks, because I did buy them at these lows here, or quite close to them. I didn't time it perfectly, but I was a buyer on that day. So we'll see what happens with it. Overall, why does the balance sheet matter? Why is it so important for the balance sheet? Thank you for your support, Jose. I do appreciate it. You are an OG of this channel. Much love. You are a critical member of the team. You help so much in the Discord. I love you, brother. Thank you so much. Why does it matter? Why does the balance sheet matter? Well, because depending on what they do with the balance sheet, and the Federal Reserve did not say what they are going to do yet, but what they could possibly do and what they plan to do. What they plan to do is not so bad, but what they could end up doing would be worse. So, you know the saying, don't fight the Fed, right? Don't fight the Fed. The Fed is your friend. Keep on buying stocks as long as the Fed is your friend. Well, right now, the Fed is still our friend because they're still buying treasuries. They're going to stop buying them March. So there is still some quantitative easing going, but they're tapering down right now. So technically, the Fed is your friend right now, but the stock market doesn't work like that. It's looking forward. It's trying to predict what's going to happen in the future. It's trying to price in all of that. And what could happen is eventually the Fed will no longer be our friend. And if you're long stocks and long U.S. equities, well, then you're actually fighting the Fed. Opposite of don't fight the Fed. Now you are doing that if you're long. if there is quantitative tightening. And that's if they do some things with their balance sheet, mainly if they start selling treasuries. So right now they're buying treasuries, they're building up their balance sheet. What they say they're going to do is they're going to use the federal fund rate first to try to tackle inflation. That's going to be their primary tool. But then outside of that, the balance sheet of the Federal Reserve is very big right now, and it needs to be reduced. One way they can reduce it is they just do not reinvest. So the treasuries that they hold, when they expire, they just let it run off of the balance sheet. But what they can also be doing to reduce the balance sheet is they could be selling treasuries. That's essentially taking money out of the market. So right now they're putting money in the market. They're about done that. They could potentially just let the market be, or they can do quantitative tightening and take money out of the market. And that will impact the capital markets. That's what everybody's scared of, and that's why we've seen this drop. So quantitative tightening is when they actually start taking money out of the system. And one way they can do that, one way that a lot of people are afraid of, and that's why everyone's talking about the balance sheet, is by selling treasuries. And that's why we're seeing this sell-off. So one comment here, they're going to have several meetings about selling their balance sheet. This is correct. So Jerome Powell said there's going to be at least one more meeting where they need to discuss what they're going to do. They have to go into the details. But then also in that conference, he said it's his guess that they're going to have at least 2 meetings of discussion before they actually do anything, before any action. And what that action is, what measures they take, we don't know. It's pure speculation right now. And in my opinion, the market is speculating that things are going to be a little bit worse. There's going to be tightening and there's going to be more rate hikes than there might be. We don't know what's going to happen. That's basically the end of the story. We don't know what's going to happen with inflation. We don't know what's going to happen with unemployment, the employment markets. Things could just correct on their own, or we might need a ton of rate hikes and some quantitative tightening to be able to get this thing completely under control. And if that is the case, then there is more downside than the current levels. Right now, we're basically pricing in 4 to 5 rate hikes, no quantitative tightening. We'll see what actually happens. So that, in a nutshell, is the Federal Reserve. To be completely honest, I'm not really scared of the Federal Reserve right now. Jerome Powell has been quite nimble. He has been he hasn't been very hawkish in the way that he's been running the Federal Reserve. So I don't think they're going to do anything outside of what they said they were going to do. And if you stay on top of this data, I think you can beat the Fed to the punch, because if you start to see inflation just continue to get higher and higher, you will probably know what they're going to do before they announce it. They're not out there telling you what they're going to do right when it happens. You have some time to kind of predict what's going to happen. So there is a way to just continue to take a look at this data, come up with a conclusion on your own and act on it, or just be an investor, keep this in mind, keep cash on the side so you can buy the dips and just ride the wave. So next on the list, I do want to say a couple more things about this Federal Reserve meeting, some notes that I have from listening to it, some things that I thought were quite interesting. So we know that there's a labor shortage. He used the word nimble quite a lot. He used strong economy quite a lot, and he used wage growth. By using the word strong economy a decent amount of times, with a strong economy, that means that they can raise rates. So he's indicating by using that word quite often that we are going to see rate hikes, but I think everybody knows that. It's a matter of how many rate hikes we're going to see. He also talked about the semiconductor shortage. So there was a question presented where they talked about the Ford CEO saying that we could see this semiconductor shortage kind of ease in 2022. Jerome Powell actually said he doesn't think that's going to happen. He thinks it's going to be longer than that, and we could see these semiconductor shortages and constraints in 2023. So in that sector, if you're looking for a used car and you see the prices right now that are quite outrageous. I bought a 2018 F-150 in 2020 or yeah, in 2020, and I could sell that F-150 for more than I bought it. It's just ridiculous with more miles, with it being older, and I just dropped it off at the dealership to get some work done. There are no trucks out there on the lot. It's completely bare. The only vehicle that I saw was a Ford Explorer, and then some trade-ins, some some Nissan Muranos and other stuff like that. There was no, there was no F-150s. There was one Ram actually. And then, so if you're looking for a used car, we could see this supply chain shortage or semiconductor shortages for quite some time. Prices can stay elevated, and that also means it's harder for new vehicles to be produced. And I think that is a good segment into the next thing that we're going to talk about, which is Tesla. So before we dive into my overall opinions regarding this company and this stock, let's take a look at the chart because they just posted earnings. So if we take a look at Tesla, yes, he also did not deny or I don't know if a question was presented if they would do. I think there was if they would do two rate hikes in one at once. So increase the Fed fund rate from 0 to 0.25% to zero point 0.5 to 0.75%. If that would happen at one time, he didn't deny it, but he didn't say it was going to happen either. I don't think that's the route they're going to take, unless the data comes in and they need to act faster than to try to get things under control, because you have to remember that it's not like immediate impact with raising these rates. You will see an immediate impact in equities, but with the market and inflate or the economy and inflation, it takes time for this to take place. So they could just do it all in one shot, which I mean honestly isn't the worst thing out there for the economy. Just get it over with. Why do we have to wait to do it? Like, why does it matter if we know that we're going to need at least three? Just get three of them done so we can move on, see what kind of impact there is, and if we need to act more, we can. It's not like I don't understand why we had to taper down as slowly as we are. We could have just stopped buying treasuries, and I don't know why we need to rate hike just a little bit here, a little bit there. Like, at least get some kind of initial decent size rate hike, and then we can say, all right, well, now let's add a little bit here, a little bit there, or take off a little bit based on the results that we're getting. That's my opinion, at least. I don't see the reason to nimble and just kind of go little by little. We know what's going to happen. The markets are pricing it in anyway. Tesla. Let's take a look at Tesla. So Tesla had earnings after hours, and if we take a look at the 1 day, 1 minute, it dropped initially. This happens a lot with stocks. You'll see that the print is released and there's a sell-off. Could be traders that are just getting ready to sell regardless of the outcome if they don't see an immediate pop. Could be just robots trading it, quite frankly, just off of what's being printed, headlines, and what's being released in the news. But following that, while that news was digested a little bit, the earnings, which were good, Tesla's going to have good earnings. I don't think anyone's saying that they're not going to have good earnings. It depends on how much of this is already priced in and what kind of reaction do we really get. So Tesla off of earnings went up, but if you take a look at the session high at $987.69, we didn't break that. So even though it did have a positive session in after hours, it didn't break the daily high. So it's really nothing to say, woohoo, look at the stock price of Tesla. And honestly, given the reaction, we could see red tomorrow. That's my opinion. Now, earnings were good. They stated 50% annual growth in automobile sales for multiple years to come. I think we are going to see a push in EVs, and Tesla is the leader, and they're going to do well. I don't think anybody is doubting that. They had 29% automotive margins, and they beat on a lot of things. So the print was good, but it's a matter of valuation and what the market's going to do with this stock. So this stock had a high of $1,243.49, and it has been selling off, but quite honestly, it's still like a lot of people are still very, very green on this stock because of how well it has performed. If you take a look at the weekly chart, you can see that since 2020, the stock has gone parabolic. It keeps on moving up higher. It's been consolidating, breaking out higher. But Tesla right now, if we analyze and take a look at the fundamentals for Tesla, Tesla right now, and this is the knock on the stock, is they trade at a price to earnings ratio of 342, which is just crazy. And people are selling stocks that have a price to earnings ratio of 60, of 40, because it's too high. They also trade, because of this price to earnings ratio of 342, is basically trading at a price to sales multiple. And the stock is, or the company is worth around $1 trillion right now, well above all of the automakers combined. So what that indicates to me is that Tesla is a momentum stock, it is a story stock, and it also is pricing in something outside of automobile sales. You might say that's solar. I strongly disagree. Solar is such a small portion of Tesla. What it has to be pricing in is robo-taxis, which might happen, might not happen. Well, it's probably going to happen. It's just a matter of when. And is Tesla going to be the only company doing robo-taxis? Is Intel with Mobileye not going to be doing it? They already have test programs in cities. Are they not going to partner with other companies? Is Google and Waymo not going to be doing it? Is Uber not going to get in the mix? And how big is that market really going to be? And all of the regulations and scrutiny that need to, or all of the regulations that need to pass to allow that to happen in cities and states, with the Department of Transportation to actually have a vehicle on the road without a driver paying attention, that is still a long ways away, in my personal opinion. So if you're buying Tesla and you're at these values, you have to say to yourself, am I okay holding this stock if it drops a lot from these current values? Because those robo-taxis might not come as soon as people are saying. ARK Invest and Kathy Wood think this is going to happen by 2025. I don't think it's going to happen in the next couple of years, maybe in 2030. So, Steve, I do not think Tesla is going to hit $1,200 by the end of the week. I don't think Tesla is going to hit $1,200 by the end of the month, and I don't think Tesla is going to hit $1,200 by the end of the year. I don't think with the climate we are going into that a stock trading at a price to earnings ratio of 342 is going to see that kind of move unless something crazy happens. But I could be wrong. I don't want to short Tesla because there are a lot of people that love it. It's a cult essentially, but I don't want to put my own money into it because I just don't like the risk to reward at these levels. Maybe if we drop a significant amount. And I mean, honestly, like if you've been watching this channel and you know the stocks that I've invested in, I got into Ford at around $11. I'm still in Ford. Just cutting a small amount of my position because I gotten into some situations where I've sold covered calls and those covered calls actually ended up in the money. So instead of just letting go of so if I have 15 leaps and I sold 3 covered calls and all 3 of them went in the money, instead of unloading 3 leaps and just doing it that way, what I actually did is I sold 1 leap and I bought back the covered calls and I kept the difference because I'm still bullish on Ford. I love Ford's story right now, moving into the launch of the F-150 Lightning, the E-Transit van, which is also seeing some nice reservations. The Ford Maverick, which isn't an EV, is also seeing some good reservation numbers. The Ford family is buying stock in Ford. There's just a lot to like, and it trades at a price to earnings ratio. I don't quote me on this, but I think it's around 12 to 13 compared to 342. And Ford, I think, is the sneaky EV play. I think it's going to be one of the top 3 companies in EV sales in the United States. That's my opinion, at least. We're going to get on the futures. Now, before we do talk about the futures, there's a few things that I do want to mention just real quick. Apple reports earnings tomorrow. Apple is a huge weighting of the Nasdaq and the S&P 500. So, and Apple, unlike Microsoft, has a little bit more exposure to China and supply chain constraints. This is probably one of the quarters because of holiday sales where Apple might be able to fight through that. And there are a lot of bullish bets on Apple heading into the earnings. I just saw that somebody is putting a $230 million bet, $230 million on bet on Apple. They are selling puts on Apple. They collected around $750,000 on Apple. If Apple is above $140 by the end of the week, so it doesn't drop off of earnings, they will make $750,000. If Apple drops below 140, then their risk is that they have to buy $230 million worth of stock. That's a huge, huge bet. And quick note, my personal account, I was in Apple, but I sold out of my position 100% in Apple. I still have Apple exposure through my 401k, which is heavily invested in large caps. So I have exposure through Apple. But before, like it was a week or two ago, when I was sitting on around 30% gains on Apple, I trimmed it at first. And then I said to myself, I think I'm going to sell this all so that I can buy companies like Uber, PayPal, Disney, so I can use that cash there because I just have exposure to Apple through my 401k and just looking at the chart with PayPal being down 50%, Disney being down like 35%, and Uber still below its IPO levels and has a very strong case for a readjustment off of valuation. I just thought my money was better served elsewhere. So Apple is important tomorrow. They report earnings. I want to talk about Meet Kevin and what the hell Meet Kevin has done. So Meet Kevin sold 20 mil, his entire portfolio basically, which felt like he did that 10 minutes ago. And then 9 minutes ago, he bought around $9.5–10 million worth of stock. He's timing the market, and the purchases that he bought Lemonade, he bought Shift Technologies, he bought Nano Dimensions, he bought, what are some of the other stocks he bought? Lemonade, Nano Dimensions, Shift Technologies, he bought SoFi, he bought BKKT, Back Holdings, he also bought, they were all small caps, all companies trading at price to sales multiples. He also bought some cryptos. That is the complete opposite approach of what I would be doing. His logic for his reasoning for the sale or the buys is because he thinks that small caps are heavily shorted and we could see hedge funds cover their position, and that could result in an increase in those stocks. He also bought Tattooed Chef. That was another one. That might happen, but that is extremely risky play. It's not based off of valuations. It's not based off of fundamentals. It's based off of what he thinks other people are going to do regarding these stocks, which is against what I believe you should be doing at this time. I believe you should be buying companies, or you could short companies, but honestly, the better approach is buying companies that you think are undervalued, buying companies that you love, buying companies that you personally utilize and personally are customers of, and that you're willing to hold. Or short companies that are extremely overvalued, are extremely high price targets that you think. Maybe do a little bit of both so that you have a hedge. If the market falls, then your shorts do well. If the market rises, then your longs do well. But you should not be doing short-term trades based off of what you think somebody's going to do or what people are going to do regarding certain stocks. That is not the move you should be making right now. And given that we are going to see rate hikes, we don't know what's going to happen with the balance sheet. Earnings matter, valuations matter, and when you buy small caps that are trading at price to sales multiples, just because the stock drops 70% doesn't mean it's undervalued as a stock, because we did have a bubble in small caps, we did have a bubble in SPACs and IPOs. The market was a bubble, and certain sectors, some sectors got very bubblicious, are going to really suffer and they might never recover. But companies that actually perform well, companies that have been around for a long time, have strong balance sheets, and have earnings, they will stay. They will stick around for the long term. And then the last thing before we get into, so what time is it? 8:32. I'll probably be on for another 30-something minutes. If you guys have any questions or any tickers, I'll try to take a look at them. If I don't know the company, I'll do a little bit of technical analysis. But I think knowing the company is more important and more valuable than technicals. And here on the live stream, I can only really take a look at technicals. It takes a lot of time to do a deep dive fundamental analysis. So if you don't know, I'm invested in Disney. And this is a competitor of Disney. We got some news. The stock that we're talking about is Netflix. If you didn't see, there was a huge drop on Netflix. So Netflix today dropped 1.83%, but Netflix was trading at $700 back in November and is now trading at $359. So massive, massive drop. Today we got news that Bill Ackman, if you don't know who Bill Ackman is, he is a very notable hedge fund manager. He can be quite cocky sometimes. He can be quite arrogant. But he is well known. He has had some really good bets and some really bad bets as well. Bill Ackman today bought a ton of Netflix. He is one of the top 20 holders in the company right now. He is very bullish, apparently, by where he's putting his money where his mouth is on Netflix. He thinks there is a good chance for this stock to rebound. When you take a look at Netflix, do you use Netflix? Do you like Netflix? I personally do. I personally love Netflix. I think it's one of the best streaming providers out there. It might be a little bit higher in price compared to some of its competitors. There are more competitors right now, but it's still a great service. It provides a value to its customers. It's a company that's been around for a very long time, and I don't think it's going to go anywhere in the foreseeable future. This is a company, if you did your analysis and you did your due diligence, this is a company, if the value works for you and you don't have too much exposure in some of its competitors and you can have this kind of stock in your portfolio, this is the kind of stock that you should be buying. A quality name, heavily discounted, and you can hold this and you can make money on it potentially long term. This is the better risk to reward entry than buying a company like Lemonade or Shift Technologies or Nano Dimensions. These are the kind of companies that you should be buying right now. That's my opinion, at least. Now, I will not buy Netflix right now because I have Disney. I put my money in Disney. I like the diversification that Disney has. And with Disney Plus, I get exposure to streaming, ESPN, and all that. So I'm not going to have Netflix and Disney. But I do like Netflix at these values. if I didn't have Disney and Disney was trading at a price that I thought was too much, which I still think Disney can come down. I'm not fully in it. I like Disney at 125, but I like Netflix here too. I think both of them are great companies, and I think both of them you're going to make money in. Disney was the laggard of the Dow last year, and typically when you see a company like that being the laggard, history shows that the next year is going to be a good year and it's going to outperform the Dow. So that's what I think is going to happen with Disney. That's why I put money in Disney. And Nancy Pelosi also bought call options in Disney, and that's just good to see because she's been killing it. Semiconductor sector stocks. Yes, I have exposure through Intel. It's more of a value play. Intel had earnings today. I don't like that I'm small. So semiconductor stocks, I think if you find one that has good value to you, it's a good sector to be in because we are going to see growth in that sector. Personally, the reason why I'm in Intel is because there are a lot of fabless companies out there. And if anything, what we learned during the pandemic is that we need to manufacture, we need to make the chips here on US soil or North America, Canada, whatever, just not in China. Taiwan Semiconductor is probably the biggest manufacturer of semiconductors out there. Companies like AMD, they're great companies. They make great chips, but they don't actually make them. They're fabless, they're fab light. We need companies that actually, or we have a huge need for a company to actually make it. And Intel, with the new CEO and the new mission of this company, they're trying to be that. If it works out, I do not know. But Intel is a stock that is going to not really do much for a long time, but eventually it could do something. And that lack of volatility, I actually like with Intel because I can just sell covered calls and not really worried about it too much. And the stock hasn't really gone against me too much. So even though I don't have a great return on the actual options that I hold, being able to sell and make money every single month or every couple of weeks by selling covered calls, it helps the position. It's one of those stocks in my portfolio that it doesn't provide stress, and I think there's a lot of upside there with Intel. But that's my stock. AMD is also good. NVIDIA, they're also good. You just have to worry about valuation and just pick your price. Let's take a look at futures. Let's take a look at futures real quick. Let's take a look at futures, and cheers. If you're new to this channel, hit that subscribe button, ring that bell, and smash that like button. Also, we do have a Patreon. You can join the Patreon. It's $5 a month. A link is provided down below. It'll give you access to that Discord server where a lot of members are there. We talk every single day about stocks and cryptos. It will give you access to valuation spreadsheets and other stuff as well. We do have meetups every now and then. But it's $5 a month. I think it provides great value, and it's a huge support to the channel. If you're interested, check the link down below in the video description. But cheers. Futures. So we looked at the Nasdaq, which I think is super important. The Nasdaq is going to be the index that tells us the most moving forward. And we'll draw some lines here, right? So we'll add a drawing. We'll draw this horizontal line. That line right there is a support that has to hold, right? If it doesn't hold, then things are not looking good. On that day, Jim Lebenthal of CNBC said, this looks like capitulation. This looks like a moment of capitulation. Basically, capitulation is when people have stocks and they're green on them, they sell them. It's a moment of just a massive wash of sales. And after that, that capitulation could set our low. There's no way to know if what we saw on Monday was capitulation or not. It's impossible to predict, but when you see the stock market drop like that with such high velocity, you got to be a buyer, but you don't got to go all in. And I personally did not, but we're going to keep an eye on the market. We're just going to continue to nibble. So we'll see what happens. The futures, they are dropping. So we're at the session lows, which occurred at 3:30 while Jerome Powell was talking. So here's the session lows. We're right at them. Let me zoom in here. So this bar right here is 6 p.m. This right here is 3:10. This massive sell-off. So 2:30 is right here. This is when the press conference started. His remarks were like 10 minutes, 10, 15 minutes. Get into questions, and then you saw that sell-off in the futures. We're at that point right now, so we'll see what's going to happen. But let me draw a horizontal line here. These are our lows, which we're essentially at. And let me back up 5-day, 5-minute. So here we are. This right here is our next point where we could bounce. If we bounce there, we're likely testing those lows that we talked about in capitulation. So tomorrow is going to be an important day. If we take a look at the 1 year, 1 day on the futures, and here's our grouping of our 3 lines, right? So we can kind of see that we were bouncing at these peaks here. After down here to 13,250, let's say, right? That's where we're at next. We're here, 13,250. So one thing I don't like about Thinkorswim is that it's real hard to see the. So I'm just gonna do this by calculating. TradingView has a good feature where you can just draw a line and it will tell you the drop. So 16,767.5 minus, what did I say? 13,250 divided by that high, which is our base. So that would be a 21% drop if we were to hit these levels. That puts us in bear market for the index, which is possible. Sell off, is it correction or a bear market? What do you guys think? Bear market or just sell off on the major index? The shitty thing about this is that so many stocks fell so far, but there's just a few cap tech that much of the index where they don't sell and they stay up and everything else continues to sell off, and then we see the massive sell off on those stocks, then it takes everything with it even further lower, even lower. Regardless if PayPal's down 50-60%, the index falls, you just see an event where people are just selling, hedge funds and institutions are just selling regardless of the name, throwing the baby bathwater. That's what happens when you see the index fall. So unfortunately, we are in a situation where the index is poorly diversified, in my opinion. You see 4 or 5 stocks make up 40-50% of the index, and it's just not the way it's supposed to be. At least it doesn't make sense to me. So let me take a look at some tickers that you guys have. Also, if you have any questions, taking a look at the futures is good. MNQ is the Nasdaq. MES is the S&P 500. And if we take a look at that, it's the same story. The Nasdaq just sells off more because tech stocks are being sold off. And if we take a look at the TNX, which is the 10-year Treasury, this hit 1.85%. If we take a look at the 20-day, our high here is 1.874%. And if we take a look at the 3-year weekly, we have this grouping here, which is basically 2%, 2% resistance, and then 2.16%, call it 2.15% resistance here, and then we're up to 2.5. So my estimates is that we'll be between this 2% and 2.15% by end of year. Some estimates are saying 2.25%, but that's where I think it's not just going to get there overnight, but I think we'll flirt with this 2%. It will act as a resistance. We'll finally break it, and then this will act as resistance and we won't bust through that. We'll kind of trade in that range there, which is good for if you're invested in companies like TTT. You guys aren't looking at the screen. See ya, Steve. Thanks for stopping in. I appreciate it. Thank you so much. I'll catch you on the next live. Okay. All right. We got some stocks. All right. Let's bang through this. Okay. So the first one on the list is XXC, SunCoke Energy. I don't know the company. This looks like it has a good dividend. 6%. I thought it had a nice dividend because it's trading like sideways. But that is a good range of consolidation on those technicals on the weekly. So you kind of know you have some good stop. You have a good stop loss. Drop it below it. Don't play it too tight. Let the play work out, and then you have a good point to sell. I can't speak on what's going to happen with this because I don't know what this company actually does. It's an energy company. I guess it's oil. But the chart looks so different than oil companies. If we take a look at XLF, you can see that if you take a look at this, it's been moving higher. If we take a look at XOM, it's been moving higher. That XXC hasn't really been doing that. It's been moving sideways. So if you knew if the fundamentals support and you have a nice reason for a catalyst and why the stock market is not pricing this correctly, that's one story. But technicals, this is trading in a range, and a range is fine. You know where you can stop loss out and you can know where you can sell, and that's basically that $8 and $6, a $2 range, which is nice considering that this is only trading at $6.80. Next on the list, we're going to go to CMC. This feels like another one of these. This is metals, commercial metals. Now this is been trading in an uptrend. The trend line's like that. It's almost a channel, an upwards channel. Come on. So there you are. Let's get to the yearly. So there you are. And it's been bouncing. If you can catch it at the 200-day moving average, which is that light blue line, you got two levels where it bounced off of that 200-day moving average. Has a 14-cent dividend. It has EPS positive. And at last earnings, it beat expectations. Expectations were 1.295. Let me go over here. So this is a company. Again, you gotta do your due diligence, but based off of trading, off of technicals, this is getting very close to a buy. If you see the market sell off and you see it get to that $31.85, let's say, bounce off of that 200-day moving average, I think that's where you enter in. Or if you're long term and you see a reason for this to continue to go up, you get in now, and you just, if it drops a little bit, you add a little bit more. Ally Financial, this is a company that I personally am invested in. I think bank stocks are going to do well. And going back to what I said earlier in this video, buy companies that you personally use. I personally use Ally Financial. I think it's a good service. And this is a company that I think will do well long term. Based off of valuation, it has a good price to book multiple too. It's under 2. So the valuation is strong in my personal opinion. It has a decent dividend. But unfortunately, the stock has not performed the way I wanted to. But that doesn't mean that I sold. I'm just adding to it slowly, not really much more because I have a good position. I'm selling covered calls against my position. Financials are a sector as a whole that I think will outperform in 2022. So this company, fundamentals, we're at this support here at $45. That's where you would buy. You would move up higher, and you're selling at the peak here at $53. That's what I think you would be doing in Ally Financial, but this is a good company. So Jose has AOSL for semiconductor. DC is asking about BTI, DIA, and VXA. So DIA is the Dow Jones. So the Dow Jones, if you're looking at this, this is the Dow Jones ETF, I assume. I'm pretty sure this is the ETF that tracks the Dow Jones. This is if you're bullish in the overall index. Now, there's three major indices: the Dow Jones, the S&P 500, and the Nasdaq. Nasdaq is more tech heavy, where the Dow is more industrial, more defensive, more consumer staple types of stocks. So the Dow should hold its ground better than the Nasdaq. So if there's one index that I think is going to probably perform the best out of the three, is the Dow Jones for this year. But if you are an investor, you have to be looking for growth at a reasonable price. You have to be looking for companies that are going to really deliver those returns over the long term. And I think tech stocks are going to outperform consumer staples, defensive, cyclical stocks over the long term. So it depends on what your mission is. MP Materials, ticker symbol MP. So this is a stock that we sold. We got in at $10. We rolled it up, and I ended up selling right here at around $45, and then it took off to $53. I was a little pissed off, like, what the hell? I just sold this stock. Now it's moving up higher, and now taking a look at it, it's at $39. MP Materials is a picks and shovels play for the EV sector. They mine rare earth materials. These rare earth materials are used in the magnets that are used in electric motors. So it's not just EVs, it's drones, it's military defense, and it's based in America in Mountain Pass. That's why it's called MP. Mountain Pass is the mine. It's in California. They receive grant money from the Department of Defense, I believe, so what they do now is they mine it, but they don't have a facility to actually process it, so it's sent over to China. The grant money was to build that facility. They reached an agreement with General Motors, so they're going to be one of General Motors' suppliers. When you take a look at stocks like MP Materials, and there are some other plays out there that are picks and shovels plays, mining companies for EVs, electric motors, and lithium-ion batteries, which will be crucial components with the adoption of EVs, which they're going to need a ton of these materials. When you play these supply chain type stocks, they can go on these massive moves up, and valuations can get stretched. And if you just wait for your opportunity, I think it's well deserved. So stocks like MP Material, if you can find some graphite mining companies, stocks like that, lithium companies as well, LITH. If you take a look, nope, that's not it. I'm blanking on the name. LTH. Okay, well, we're going to forget about that because I don't remember the ticker. But there are some lithium ion companies that they traded much higher. I didn't buy them because they're too high, but I'll have to revisit that. Maybe that'll be a video for the future. Do some research on some supply chain picks and shovel plays for EVs. I'll see you later, Andres. Thank you so much for signing in. Thank you so much for your support. You the man, you the OG. All right, we're getting into AMC. All right, AMC support levels. I'll tell you where the support level for AMC is. It's at, oh God. So this thing sold off. Today wasn't that bad, but it's just been selling. I guess you got to go here, right? Here's your support level. That's I don't know if it's gonna hold. $14.50. Did we get to that value? Let's take a look at the 5-day, 5-minute. $14.23. So yeah, $14.50, $14.25 is the nearest support. After that, I mean, you got some good points to go off of. Back in March 19th of 2021, back in May 17th of 2021, and back a couple of days ago. There's three levels of support at around $14.25, $14.50. If you want to trade it. I would not hold this thing long. AMC is going to have to dilute without a doubt. they're going to have to dilute. They're not cash flow positive. They're burning cash on rent. They're not making enough money. And the only way for them to grow the business and to stay afloat and not file for bankruptcy is eventually having to dilute and sell stock. They can't do it right now because they capped out. They sold all of what they could, and now they need to hold a meeting with shareholders and ask for approval to be able to. They're going to ask for approval. It's going to be a crazy amount, which will last them for a couple years, and then they're going to dilute over a couple times. So what's the word I'm trying to say? They will sporadically dilute their shares when they think the timing's right and when they find a buyer. When you get into a stock like AMC and you want this short squeeze, the mother of all short squeezes, momentum is huge. And the biggest thing for momentum is having people who are going to buy the stock. This stock got so popular along with GameStop that I think a lot of people that were in it and are true believers of the short squeeze are already in it, and they don't have that kind of money just to continue to buy and buy and buy. So getting that momentum is going to be extremely difficult to do again, and the short squeeze percentage, the short percent of float is not high enough. And I'm not a believer of naked shorting at that level of degree, focused on one particular stock that the whole world has its eye on. You have to be an idiot to just continue to pile into a short when everybody's targeting this one stock. Like, it doesn't make sense. Jose, I'll talk to you later, man. Thank you so much for signing in and watching this video. Thank you so much for the super chat, and thank you so much for the support. I really do appreciate it. I'll talk to you tomorrow. OAS. I don't know this company. Petroleum. So this is one of those energy stocks. So energy is going to. So Brent crude just topped $90 a barrel today. It had a high of $90.48. This is getting up towards that higher amount. I don't think we're going to break 100. So what I think is going to happen with energy oil stocks is I think you will see a pullback relatively soon. But energy, given the environment that we live in, the lack of investments in this space, but still the high demand, because it's not going to be a flick of the switch where we just all of a sudden convert to something outside of oil. We're still going to need it. Doesn't matter how many EVs we have out there, we're still going to need it. Like, it's going to take a lot of time. So that lack of investment, the lack of new drilling, and still the high demand creates a very interesting environment for energy stocks, oil stocks, stocks like Exxon, stocks like Chevron, stocks like ConocoPhillips. These stocks are doing really good with their capital expenditures. The money that they make, more of it is getting down to the bottom line. More of it's getting into the pockets of the shareholders, because they're doing a really good job ever since when oil dropped to, what did oil drop to? What did Brent drop to? Brent dropped to $16 a barrel. Futures in oil went negative. People were getting paid to take on barrels back in April of 2020. So the long story short, these companies are performing really well. They're bringing money back to the shareholders, but short-term technicals, we're getting towards that higher end. We could see a pullback. Maybe that pullback's a buying opportunity, or maybe you just completely close out of your position and you look for a different long-term investment. But given the dividends, given the climate we're heading into, I would be a buyer on a pullback if you haven't entered into a position, if you want to get into that kind of play, or do what you want to do. But I do think that this is going to be a sector that could perform really well in 2022. So it's 9 p.m. We've been talking for about an hour. I can be on for another 15, 20 minutes. We'll try to take a look at some stuff. Let me see what's going on in Barron's. We'll take a look at Barron's and maybe about some of the stuff that's going on in the market right now. So let's take a look at Barron's, see what Barron's is reporting on. So we talked about the Federal Reserve. Also, real quick, if you're new to this channel, my name is Sean. This is We Are Investing, a channel that's dedicated to investing in personal finance. If you wouldn't mind, please consider hitting that subscribe button, ringing that bell, and smashing that like button. So we got to talk about the Federal Reserve. We've already talked about it. Powell spooked the markets. They ended up red. We know that. They were up until he started talking about the latest stuff here. So options trader and meme stock frenzy. Nah, that's not really important. All right, let's talk about crypto. Buy Suncor. Go ahead, do it. I mean, they're all gonna do pretty well, in my personal opinion. Let me know in the chat section what you guys think about cryptocurrencies for 2022. Cryptocurrencies have dropped a decent amount. There are some that have been falling falling off a cliff, and Bitcoin and your other main cryptocurrencies, Bitcoin, Ethereum, Solana, they're doing okay. They're holding their own, I should say. Do you think cryptocurrencies are going to rebound in 2022, or do you think the environment we're heading in, where we're heading into more of a risk-off environment, that cryptos will continue to sell off even more? I'm curious on what you think. What's up, Aaron Molin? What's up, baby? Cheers, cheers, cheers. So, if you guys ever use the scanner in Thinkorswim, this thing is freaking phenomenal. Like, when we're looking for stocks, we just set up this scanner. We'll scan for rips, and here are some of the stocks that are looking like they're going to break out. This is the rips. Watching Ripple. So on these rips, we got Sierra Oncology. Do not mess with oncology companies. We got Groupon. Groupon went up 20% on the day. We got TREB, Corning, Turquoise Hill. The only company, right? Stride. Groupon. Let's take a look at Groupon. CRPN. Let's take a look at the chart. CRPN. GRPN. Groupon. Not that exciting. Nice little pop though. Why did this thing pop? Let's take a look at Groupon. Let me link this to so Groupon. Potential windfall. Man, I'm sorry guys. I'm not used to this live thing. I gotta redo this. So in Thinkorswim, they have the scanner. I have the rips. And what I'm looking for, this is my criteria. I'm looking for stocks that are at least trading at $10. I'm looking at stocks that have a volume of at least 100,000 shares. I'm looking for a change of at least positive 5%. I'm looking for stocks that have a market cap of at least $250 million because I don't want the small caps and micro cap stocks to pop up. And I'm also looking for an RSI with the 14 length of greater than 60, meaning that we're getting towards that overbought territory, and you could see a short breakout. So this was running these scans during times where we're not so volatile. You can find some quick trades, and that's how I find my trades, by running scans. But GRPN is the one we're talking about, and we can see this massive spike in volume, but it's getting towards a resistance, and the news isn't that appealing to me. So and I don't feel like getting into trades right now. Windfall from stake. So this is going to require way more research, not something I can do on this live stream. So Groupon was really the only name on here that caught my attention. But you can also find, you can load the scan, you have your own personal ones, and you can scan the rips. And then, sorry, I did the rips. You can scan the dips. And this list is going to be massive because we've been selling off. So there's a lot of dips. There's a lot of stocks that are oversold. So very similar, my criteria here is that I'm looking for a stock that is at least $10. I don't want penny stocks. I don't want stocks that are low in that stock price. I want at least 100,000 shares. I want at least negative 5% market cap, again, over 250 million. And in this case, the RSI is less than 40. This is a very simple scan, and you're going to see a lot of companies on here that you might be interested long term. We got Spotify. Everybody knows what Spotify is. Might be a great company. Lovesac. We also have Cloudflare, which is ticker symbol NET. Clorox is in here. We have Lucid. Let's talk about Lucid later. Let me know in the chat if you're invested in Lucid. We have Pinterest. So there's so many stocks in here. We have Crocs. We have Snap. Snap's in here. Big Lots. Peloton dropped 6.7% today. Yeti. DoorDash. Like, these are all companies we all know. AT&T dropped 8.42%. Let's see which one dropped the most on the day. So Navient, which was having bad news with their loans, dropped the most today. Coming in number 2 is CTRN. AT&T is probably the most notable name, dropping 8.42%. Let's take a look at Lucid. So Aaron, you love Lucid. Lucid, I don't know if you caught my video. We were actually buying puts on Lucid, but we closed out of our position. Well, at least I did. I can't speak for everybody. I closed out of my position on Friday. So Lucid Motors has a huge risk, in my personal opinion, with the makeup of the shares. So Lucid Motors was created. The CEO is Peter Rawlinson. He used to work for Tesla. Brilliant guy. When you hear him, he has that British accent. It sounds extremely smart. So he had this vision that he was going to create a car company. He did that, created Lucid. The problem is that to be able to create this kind of company, either needs a ton of money. That's why Elon Musk was able to do this and not sell majority stake, or they need to raise money and sell off some of the company. Lucid Motors sold more than 50% of the company. So it's not owned by Peter Rawlinson, it's owned by the PIF, which is the Saudi Arabia's public investment fund. The PIF for $1 billion got 62% stake in Lucid Motors. 62% stake in Lucid Motors for $1 billion. Lucid Motors currently trades at a market cap of $55 billion. So essentially, the PIF was able to convert $1 billion to $55 billion at the current share price. Lucid recovers, it will be worth even more. The PIF is the Public Investment Fund of Saudi Arabia. They don't have a lot of exposure to U.S. equities. Lucid Motors takes up the vast majority of that. So a lot of risk and exposure and also a lot of gains. They could sell 12% and still be majority stakeholder in this company. Essentially, they decide what happens with the company. They have the most board seats. They have the most shares. So whatever they want to do happens. And they still can sell some shares to maintain control. So that's why you see news of Saudi Arabia, Lucid Motors going to open up a factory in Saudi Arabia. Doesn't matter if it makes sense for the business. They decide what's going to happen. So there's a lot of risk with that I just personally do not like with Lucid. So Lucid is not a company that I personally would be invested in because of that main reason. And also it trades at a of $55 billion with not a bunch of sales. Whereas I could get a company like Ford trading at around $90 billion, has a lot of sales in traditional ICEs, but also selling a fair amount of EVs. And it just seems like a much better risk to reward gamble or bets or investment, whatever you want to call it, in my personal opinion. Solanki, I didn't see Lending Club, but I will talk about SoFi. Now, SoFi that I am invested in, and I've made a lot of videos regarding this stock and this company. I do like them, but you got to understand something, right? So when I make these videos, I tell you that it's not one of my biggest holdings. It's actually towards the lower end of my holdings. I make so many videos on it because YouTube is also a business and it gets a lot of search. A lot of people actually are interested in this company, so it gets a lot of views and I get ad revenue from that. So I do make a lot of videos on this company, but do not get that twisted. Do not get that confused as this being my top holding. If I made videos about some of the stocks that I really like all day long, I would get no views because people aren't interested in them. SoFi for me is one of those stocks that I think you can make a good amount of money. There are catalysts coming up with SoFi, which I liked. The banking charter was huge, and we did a pop, and actually somebody on the Discord that was getting into SoFi made $18,000 off of that trade. That's awesome. I personally still hold it, but I don't hold a ton. I own 3 leaps at around $3,000 worth of SoFi, which isn't a very large position for my portfolio. But I do sell covered calls, and because there is so much interest, when you start to see turn green, people start buying up options, and I do make a decent amount of money just selling those covered calls, or poor man's covered calls, because I have leaps collecting that premium. SoFi still has catalyst with the Super Bowl. We know that. I don't know how big of a catalyst that will be. If the market is red, it won't matter. Another thing is those student loan originations. They need to get higher, but they won't happen until that pause is over. So I got into this stock before it was extended to May. I thought that was going to be huge when they were going to expire, that we would see a lot of originations in student loans, because at the end of the day, SoFi is a company that has so many offerings, right? They're trying to be a flywheel of financial services. They will eventually get to that point, in my opinion. But right now, today, and this year coming up, SoFi is around 70 to 80% of their business is off of lending, personal loans, refinancing, refinancing student loans. That is the core business. So that is that's a very risky thing with the environment we're going into. Student loans, the faster we can get that done with and we can start seeing those originations, we could see a good couple quarters of SoFi. This quarter is going to be good. Next quarter, probably still good. After that, when we see an increase in rates, who knows? And that's where things can get hairy. Because when rates rise, people are not going to take out personal loans like they are now. When rates rise and mortgage rates increase, people are not going to be refinancing their homes like they are now. Also, you run out of clientele. People don't refinance every year. Finance maybe once their entire mortgage, maybe 2 times, depending on how they're doing with their payments and all. So companies like Lending Club, companies like Rocket Mortgage, companies like SoFi, for a good portion of their business, it's very cyclical. It all depends on loans and lending. And when we get into an environment when rates increase, if SoFi does not get enough people to lend, or the other parts of their business do not pick up the slack and overcome that, there's an increase in EBITDA because of this banking charter that is going to be realized relatively soon. This stock could see a drop in revenue. And if they drop that, then multiples are going to change and you're going to see a very different stock price. So there's a risk with that. So on the flip side, you have these catalysts coming up. The next couple of earnings could be really good because we're getting into a position where, like, shit, you need to do your loans now before those rates increase. So we could see a lot of that get pulled into the next couple of earnings. Earnings could look phenomenal and you could see people piling into the stock. And then eventually, if it doesn't work out and lending starts to suffer because of rates, then you'll start to see that pullback. So there's that risk with the lending, but there's also that potential reward of a trade in the next like 6 to 9 months. So it really depends on what you're looking for in SoFi. So there's that risk, like I said a million times. So for me personally, my portfolio allocation to SoFi reflects that risk, and that's why it's not a huge holding of mine. But I do like the company. I do like the stock. I do think there's going to be opportunities to buy and sell this along the way. It's just not one of my gung-ho positions, ones that I'm completely loading the boat. That's my personal opinion, at least. I do think we could potentially, depending on what the market does, we could see that $20 to $25 price target that a lot of analysts have get hit in 2022. If those catalysts come in, the earnings are strong, and we actually start to see some momentum in the market again. Real quick, guys, if you're new to this channel, hit that subscribe button, ring that bell so you do not miss another video. I will probably do these live streams like a couple days a week. I'm thinking that I'm trying to get on the schedule. I might do them Sunday nights before the market opens. We'll take a look at the futures before market opens. We'll do Wednesday, and maybe I'll throw in another day there. Let me know in the comments or the chat if you like these live streams or not. So REITs or REITs, so real estate investment trusts, they have good dividends. They have to pay like 90 to 95% of their profit in dividends. Real estates are still doing really well. And you can get into REITs or REITs that are actually kind of very sector specific. For instance, you can take a look at a company like American Tower. This is a REIT or REIT. And what this company basically does is they rent out cell phone towers. So if you take a look at one tower, they could sell out that tower or rent it out to multiple providers, service providers. So in the one tower, they can have Verizon, AT&T, T-Mobile all in one tower. With 5G expanding, these companies had a good year, and that's why probably if you was to take this back to the 3-year weekly, you could see it did have a nice pop, and now it's trending lower. But they provide a dividend, as you can see here, $1.39 in dividend. So if you find a real estate investment trust in something that you think has good growth potential, like a cell phone tower, which I'm not recommending to buy this right now, this isn't financial advice, but if you find one, like let's say it's rentals near colleges, there are REITs that just focus on properties that are located in college towns. You could say, well, I think those probably got beaten up. You know, people weren't going to school. This is actually a really good thought that maybe I should do more due diligence on. But if you find a real estate investment trust that's focused in college towns where the last couple of years were really tough, but moving forward, and once we get past COVID, people will start moving back to colleges, living on campus, living just off of campus, renting those properties. Those might present a good value. So you just got to find that niche, and then find that stock that works for you for a real estate investment trust. Cheers. I'm running low. um, So it's 9:20. If you guys appreciate the effort that I put in and the time that I put in, you can do a super chat. I would appreciate it. You could also join the Patreon to join the community of over 500 investors. I'm not lying. We're talking every single day. You'll be able to communicate with me or other investors, and we just keep it honest. We keep it real. We just say how we feel. We don't care if you're long or short a stock. We just want to hear your opinions and take those opinions into consideration. Do the research, weigh all options, and just be real. Like we're not team this, team that, and against anybody that's against this stock or that stock. I hate when people bash people for buying a stock or selling a stock. Me, Kevin sold $20 million. He said that he was going to wait out a month. He bought $10 million today. That's his choice. I'm not going to bash him for that. His personal decision. When you're investing your own money, you got to do what you feel most comfortable doing, even if that might not be the most sound investment advice. Because the main thing is if your emotions are out of whack and you just feel sick to your stomach and you just do not trust what you're in, get out now before things get worse and then you're left making an emotional decision. When you get into a position, you kind of want to get into it with like with your emotions clear and keep them clear. Get into investment knowing exactly what you're going to do so that when the shit hits the fan, you're not like making emotional decisions. You can't act on emotions when it comes to the stock market. So if you get into a position and you're acting emotional, get out. Try to find a position that you're not going to be emotional and learn your lessons along the way. But with all of that being said, it is now 9:22. We've been on for an hour and 22 minutes. I'm going to wrap it up. Let me know in the chat or the comments if you like these live streams. I'll catch you all on the next video. I'll probably do another video on Friday and then a live stream on Monday. I'll be on the Discord. Hit that subscribe button, ring that bell, and smash that like button. I thank you all for your time. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.